This week, we saw massive action in the currency markets. And in today's video, I want to review with you some of the technical analysis that we performed that enabled us to extract some pretty good profits from the markets. Hey traders, Akil Stokes here, Chief Currency Analyst at TradingPower.com, and thank you once again for joining me for another Forex weekend review video. As I mentioned in the intro, we had a massive trading week, a lot of action in the markets, and well, I want to show you some examples, but there are really so many that I'm not going to be able to do it all. So what I'm going to do is this. We're going to pick two examples of trading opportunities or trades that we took this week in the live room and the syndicate that I think provide the most education for you guys. Because after all, you're joining me each and every week, not just to see this handsome face, but also because you're trying to get a little bit better at trading. So I got to make sure these are educational as well, which they always are. The two trades we're going to take a look at, we're going to take a look at the dollar-yen trade first. We are waiting for a potential advanced pattern, and we ended up taking a structure-based trade. So I'll show you some recorded footage from our live room where we broke down the opportunity and ended up taking it live. And then after that, I'm going to share with you a very good video. We had a trading buddy of mine that shared his story with our syndicate members of really just how he went from struggling trader to now working at a prop firm. So that's pretty cool, pretty inspirational for you guys. And then I'll share with you the trade we took today on the euro dollar. It was another trade where we used a combination of basic price action movement and advanced patterns to get involved on the right side of the market. That one's pretty cool. And at the very end of it, there's an excellent lesson on discipline as the traders in the live room watched me sweat it out as my profit targets were one pip away from being hit. And I was so close to breaking my rules and taking profits early. It's pretty cool to see that. Just because I'm a professional trader doesn't mean I don't feel the same emotions as you guys. I do. I just don't act on them. So we'll hop right into it. We'll take a look at the dollar yen, and then I'll see you guys in a little bit. We could have a potential double bottom at previous structure. If we look at the ebbs and flows, again, if we just, even if you just put your cipher pattern back on, you got swing low to swing high, right? Outside return. Actually, you have this. If you want to get real involved, you got swing low to swing high, outside return. Boom, new structure high, outside return coming to test this level, right? Look left. Structure leaves clues, right? I don't know how much we have going left again from that, but at least recently left structure leaves clues, right? We've got this level, this level, this level, this level 4 times. We've got new structure high here. The market has come right down to this level. Now, not too convinced that bigger picture, this is going to be that really big reversal level. Again, we looked at the daily chart. We kind of saw that we're coiling. So we're just essentially in consolidation, but this could be a structure zone that you pay attention to as you go down to the lower time frames. So let's head down to the 15-minute chart here. This is a shot for you guys that are day traders. Again, we're on the 15-minute time frame now. This is a shot for you guys that are day traders for a potential long opportunity. Here's what I would do because it's not the best opportunity in the world. I would wait for a retest of this structure level. I would wait and see if price action, again, if then thought process, if price action comes back down to test this level, this 119.75 level, I would wait and see if that happens to get a hold right there. Look for continued divergence on the RSI and maybe look for an opportunity to buy it up. If you're going to buy it up, where do you think is a good place to look for targets? Dollar yen here, I'm hoping we don't rally too much. It's slowly messing up my risk reward, but we did come down. We double bottom. We got a nice little we talk about candlestick wicks a lot in this room. We got a nice little wick down here testing that level and holding. I am now long, not a bad fill, 119.86. Stops are going to be down at 119.58. Let me just update the syndicate. I'll do it later. Looking for targets up at this level, this 120.22 level, 120.20 level. For first targets, as you know, in the syndicate, we have only been taking one target. For me personally, second target's going to be up here at this previous level of structure, 120.50, so 120.48. But I was looking on the 5 range to see if there's a chance I can roll stops anywhere, and they're just not. Meaning what I want to do is, as price action works its way up, especially with these structure-based trades, I like to manage my stops. So my whole goal is to get stops to break even because I don't want to lose money. That's my whole goal. So I'll often look on a range bar chart or my lower time frame and see if there's a way I can manage stops and roll them up anywhere to kind of protect my risk. I still have full risk open on this trade, as you can see. I can still, it went 16 pips in my favor. Whoop-de-doo. I'm still exposed about 30 pips here. So, you can't get excited when it goes your way until targets are hit. I mean, it means nothing. We went up 20 pips, but does that mean you have $20 in your pocket? No, it doesn't at all. You still have 30 pips of exposure on. I can still lose $300 or $30, whatever your position size is. You can still lose that much on this trade. So you can't get excited. So my whole goal is to roll stops as much as I can. However, there's just been nothing here because we just went straight up. We did not ebb and flow. There's no way I can roll stops. So I gotta stick them out. So I'm still not too excited about this trade here, mainly because I've got exposure. I've got risk open. I don't like risk. If you haven't got the theme already, that's the theme, guys. I don't like risk. And that's the reason I've been so successful as a trader. I try to avoid as much risk as I can. We all know the saying, bigger risk, bigger reward. Well, I don't really care about the big reward. I can care less about the big reward, guys. I want to make a small, consistent return. That's all I want to do, right? We've seen my videos talking about 3% return. You see my videos talking about. All right, guys. So just taking a live look at the dollar yen trade here. Here's what happened. Obviously, in this area is where we took our long entry during the week. But there was also another trade we looked at. I'm not going to go through the whole thing, but we had 2 potential advanced patterns, or actually 3. We started off the week Monday with a pretty easy cipher pattern completion. We had X to A, A to B, B to C, C to D that ran all the way up here and then just collapsed for target 1 and target 2s pretty easily. We were then lining up that second cipher pattern, which I showed you guys in the video, which looked like this. Now, before the market got down there, we ebbed and flowed a little bit, and this actually became a Gartley pattern as well. Let me go ahead and change the colors just so I don't confuse all of you guys here. Let's make this fuchsia and brown. Oh well. So we had our cipher pattern, our first bearish cipher here in blue. We had our second bearish cipher, potential bearish or bullish cipher, here in pink. And then we actually ended up putting in a potential Gartley pattern here in blue, X to A, A to B, B to C, C to D. And these are called advanced patterns. They're essentially a combination of Fibonacci retracements that, when done in the right order, present some pretty high expectancy trading opportunities. So you can see we came down here. Now, I actually took a loss earlier in the day. I did hop on a quick long entry right here, looking to capture profits on a similar move as the one I showed you in the video. Got stopped out for about 20 pips. Whoop-de-doo. Took a shot on it. Didn't work. It happens. That's trading for you. But did bounce back at this cipher Gartley right around 119.40, a little bit below that. And you can see price action took us down for maybe about 15, 20 pips of pain before shooting up and easily achieving our first targets up at the 382, 119.77. So it's been a pretty darn good week for dollar yen. I've taken 3 trades or 4 trades on this pair. 3 have won, 4 have lost. 75%. I'll take that all day long. My trade floor is blowing up right now. Looks like my 12E transformation members just made banked some profit as well, so they're going all crazy. Oh, Euro Aussie 92 pips, 26.18. That was a big one. Maybe we'll look at that later. It wasn't on my agenda, but that's the first trade on dollar yen here. Now, before I get into the great story I want to share with you about my trading buddy turned prop firm legend, or soon to be prop firm legend, hopefully. I want to take a quick moment to say, hey guys, if you're liking the video so far, do me a favor, just hit that like button, hit that subscribe button if you're new and you're finding this information useful, and take the time to share it with a friend. I do these for free each and every week. I love doing it, but I love it even more when you guys leave great comments, when I see that you guys are sharing it all over the place, and of course, when I see that like button being stabbed to death or hammered to death. So take some time and do that. And then check out this video about a great trading story from a buddy of mine in a live room, and then we'll come right back and do some more technical analysis.
Just think, well, maybe it's just not going to happen for me. And I got this from Kenny today, and I just wanted to read it to you. He said, first off, I wanted to say thank you for all the free training that you put out to the public. I've been a member of the syndicate in the live room since January of this year. What a difference it's made in my trading. I went from consistently losing money to consistently profitable in a matter of about 6 months. I'm now working on a prop trade. I'm working at a prop firm. That's a proprietary trading firm, incorporating some of the techniques that you and Akil teach. He said, I already had knowledge, strategy, passion, etc., all that was required to be successful, but the only thing that was lacking was my psychology and discipline. And over the course of the last 9 months, watching you and listening to you and Akil, I've learned how to take the emotion out of trading and treat it like a business. I just needed to get my head right. Just thought you would like to know that. Just thought I would share that with you. As a former educator myself, I thought you would like to hear the success stories of one of your students. And guys, every time, this is not the first letter that I get like this. We have had many traders come out of the training programs that we do and go on to trading for themselves, either part-time for supplemental income or full-time as a trading career. We've had guys go work for prop firms, just like Kenny is doing. We've had guys go work for hedge funds. What we teach, again, the technicals of it, the actual mechanics of trading is something that is not terribly complicated. What's complicated is being able to deal with the emotions and being able to control your emotions. And one of the things that we teach from the day you show up, whether you're watching free information from us, or whether you're coming in and you're being part of the syndicate and war room that we're doing here, or whether you're going out and you're taking a full-on course with us to try and learn the skill and trying to put yourself in a position where you can become a professional trader, no matter where it is, at every stage of that, the primary focus, every single piece of it is designed to try and impart to you the importance of trading as a business and being disciplined about everything that you do. Because, guys, that's what separates the winners from the losers. You can have all the information in the world. You can have taken tons of training classes and spent money on that stuff. But if you haven't focused on getting your head right, and if you're not doing the things every day that let you become or that allow you to focus on the discipline, then you're never going to be successful. You are never going to achieve the type of success that you want in your life. You have to make that the primary focus. And again, the reason that I started this program was at its core was my hope that it would show people not just the good trades, that we would see bad stuff, that we would go through drawdowns, but that we'd be able to look at the equity curve at the end of the year and say, look, remember all that pain? Remember all that struggle that we had? Well, look at us now. Look at where we came through because we followed our plan, because we stuck to what we knew worked. Even though we had drawdowns, even though we had months that weren't that great, we came out on top. And one of the things that I do for you guys is anybody who wants to, I think it's important that you be here. And so I offer you a really sick discount to stay for a year. I mean, if it's, what is it, like 50% off? Is that what it is? So at half the price if you sign up for a year. And one of the reasons I want you to do that is, the main reason I want you to do that is because it locks you in. When you spend the money on something, you tend to show up. But in order for you to really see the value out of this, you've got to have been with us in February when we were having 600 pip months. And you have to have been with us in July when we were losing hundreds of pips. So that you can see and feel and find out how we deal with that. That's the trick. That's what Kenny's talking about in this email. is he's saying that's what I didn't have. That was the piece I didn't understand. But spending the last 6 months with you guys in the live room and in the war room in Syndicate, I'm learning that stuff. And it's not only have I gotten so good at it that I'm making money, I'm consistently profitable, and I'm working at a proprietary trading firm. Guys, that is something that every single one of you can do. But it's going to take practice. And, that's what we're here to do. We're here to help you facilitate. So anyway, I just thought I'd share that with you today. Like I said, one trade.
All right, so I hope you guys enjoyed that little clip. Again, I love sharing stories like that. It's one thing to hear my story of going from, teacher and cleaning toilets at night to becoming a professional trader and doing whatever I want all day long. But it's even better when you hear others do it too. It doesn't, I'm not the only one that has done that. Before me, there was Jason. I've done it after that. And Kenny's a great example of someone else that has been taken from average Joe to really given the chance to fulfill his dreams as a trader. And there are thousands of more like that. It's just, this is one of the traders we stay in close contact with, and he just wanted to share his success story. Now, the trade I want to show you next happened on the euro dollar. This was some analysis we did today during our live room session. Euro was also a cipher pattern winner, a big one earlier in the week. But when we looked at the analysis during my live room, we were checking it out more from a day trader's perspective. And it's a pretty good example of using the basic principles of reading a price chart, new structure high, new structure low principles, and then adding in an advanced pattern just to get a little bit more aggressive with the entry. So check it out. I really think you'll enjoy it. And again, at the end is a great look at how discipline plays its part in trading and how really, how tough it really is to sit there and follow your plan. It's easy to create a plan, a lot harder to actually do it. And this gives a good example of that. So I'll see you guys in a little bit. Too fast, bro. All right, let's do this one more time. Slow it down for you. I will slow it down for you. And again, if you're new, it's going to seem fast. So I apologize, but let's run through it one more time. Here's what I am looking at for the euro dollar, right? We were looking for bigger picture, higher time frame. We're still looking for that 112.80 level to be hit. But we were looking at this level for a potential double top, correct? Give me a yes if you remember that. Looking at this level, 112.55 for potential double top for an opportunity to sell. If price action gave me a double top, then I would look to sell. Price action came to that level, and what did we put in here? We put in a higher high, higher close, correct? Right? Higher high, higher close. Right? Giving me a new structure high. Higher high, higher close, new structure high tells me I should expect what type of move? Trend continuation. Boom. Perfect, right? What also happens after a higher high, higher close? We typically get what? New structure high, outside return. So what I'm looking for is an outside return back into this level. Now, we talked about this earlier, how to draw these zones out. Here's my potential reversal zone, right? Now, I'm not a trend following trader, so I'm not looking for an extension up here. I'm only looking for targets at a retest of structure level. So I know just by eyeballing it, I cannot enter at the top of this zone, because it's going to give me a reward like this. It's going to give me a risk all the way down here. And that's just not cool, right? Having a risk reward like this just isn't good the way I trade. I'm only a 55% trader, guys. I'm going to go broke trading stuff like this. So I need a deeper retracement somewhere into this zone. So I asked myself, how can I get a deeper retracement into this zone? Is there a way I can get a clearer look at this? And I go down to my range bar charts. And I see that on the range bar charts, we have the similar motion. However, we have this. If I take my Fibonacci, it's going to be a Gartley now, actually. If I take my Fibonacci retracement, we were putting in a bat pattern. Could be a potential Gartley now, I should say. We're putting in a bat pattern. We have a retracement to the 50%. We've got an outside return here. I would get a bat pattern right here at 112.41. 112.41 is right inside that zone that I'm looking for, right? That would give me a risk of this, right? A reward of that. That looks a lot better, right? What would you guys say, right? It looks a lot better. I don't like watching this stuff. I mean, I would much rather just go somewhere and then come back and be like, oh, it was hit. Good. But if I can loan you some advice in this moment, the best thing you can do is when it gets this close, roll those stops to break even. Worst case scenario, it's hard enough to get this close and not make any money off of it, but you do not want to take you don't want to take a loss. You do not want to take a loss. So worst case scenario, roll those stops to break even. You get stopped out for break even, it stings. You can kick the cat and all that type of stuff, but you don't want to take a loss. That just adds fuel to the flame. And just part of me, if I pause, it's because it's one tick away, and I'm not gonna give a chance for the market to trigger my orders. I'm gonna enter it. I'm going to close out at market if it gets up there. We're not going to play that game. So my apologies, but this is, again, hey, I trade for a living, guys. There are a lot of people out there that think, oh, man, you just do education. Boom, there we go. We hit, bang. Good job. I trade for a living. I make money trading, so I got to do this. Anyway, winner, chicken dinner. Whew, sigh of relief. Well done. Ooh. Gosh, man. All right. Oh, man. For you guys that are new, and for you guys, if you've been trading for any given time, that's what you go through. That's why I'm losing my hair. And no matter how good you get, no matter how long you trade, that feeling of being 1 pip away from targets, that feeling of knowing that, $220 or 22 pips or 23 pips could essentially turn to break even it's nerve-wracking, guys. And the feeling doesn't change, That entire time I felt like, guess what? I can't breathe. I'm waiting for it. I'm on edge. The dopamine. Everything's slowing down. The difference is that you just don't make the mistake. And that's the same thing with emotions in trading. You're always going to have those emotions, guys. A losing trade is never going to feel good. Right? A losing trade is never going to feel good. The difference is, how do you handle it? What do you do when those emotions start knocking? Do you give in and you make that mistake, or do you gut it out and trust your plan and trust yourself? That's the only difference. But I'm glad you guys got to see that. Many of you are probably thinking, oh, come on, Akil, it's only a pip. You can do it, right? That's the point of the live room, guys, to have that support, to get that example. Because I'm sure a few of you are in there as well in that same trade waiting for it, asking yourself, man, I should probably get out right now, right? And then you're seeing, oh, Akil's still in, I'll wait it out. And stuff like that makes a difference in the long run. So let's get this in. Plus 23 on Eurodollar. Winner, chicken dinner. We got to play some music. Now let's get back to business and see if we can capitalize here on Aussie dollar. All right, I hope you guys thought that was pretty cool. And as you can see, it was pretty frustrating for me to do it, but it wasn't the first time. It wasn't the last time. It will happen again. Now, I do want to show you the Euro Aussie trade that our 12-week transformation members are going crazy about. You can see, I love it. They're going wild. This is great. But before we get into that, I do want to share something with you. I've got a lot of messages this week about traders that are struggling, and some few have said, hey, I have problems taking targets early, moving stops. Some just don't have a plan. And my good friend Charles, another trader we used to work with that's now working here at Trade Empowered, has been doing a lot for the brand new trader. He calls it the struggling trader, and he set up a Facebook page. I'll share the link underneath this video. But if you go over to his Facebook page and sign up, I think he gives you a free tip on how to cut your losses right away. It's not a get rich quick scheme, anything like that, but he's been doing a great job of working with newer traders, just explaining the difference between trading and investing and really some of the tips that he's learned along the way to help him go from really to help him stop the bleeding in his trading. So that's my last shameless plug. I promise you. No more. Oh, this is pretty cool. I didn't even see that. Sorry. I do this thing live, guys, so you get it live. But check it out. Sign up. There's some pretty cool stuff, including a few videos and whatnot. And again, he'll give you a free tip on how to stop the bleeding and how to turn around your trading right away, or at least get it going in the right direction. Now, that Euro Aussie trade that everyone was going crazy about, here's what it was. It was another example of combining two different type of techniques into one. Let's go out to the 60-minute chart. I'll run through this really quick because I know this video is getting long. First and foremost, Euro Aussie 60-minute chart. We're running right up into previous resistance. Now, it wasn't a level I was too high on because there's a bigger structure level a little bit to the left. But you can see we've tested these highs a few times, and well, we've come up here and we got some nice looking wicks. When I look at these type of wicks up here, I like to say that the bulls are pushing up and the bears are really pushing them back and saying, hold up, not so fast, not so fast. And when you see that, the market typically leaves you clues on what it wants to do. Now, what we did today in the live room was we went down to the lower time frame, went down to the 15-minute chart, looking for a reason to enter. And as we went down to the 15-minute chart, we saw this formation up here. And I said, you know what, guys, that looks like a 2618. And we went one more time frame to our lower time frame for day trading. And we saw it. We saw the 2618 opportunity. If you look, we have our double top up here, really a triple top. We then have our break and close below that level. I'm sorry, I got the camera in a weird place, so it's hard for me to click my mouse and do the analysis at the same time. Let's do this. Boom. I spilled it everywhere. Darn it. There's one for the blooper reel. All right. Anyway, so we're looking at a 2618 opportunity here. If you're unfamiliar with the 2618, another shameless plug, go over to our website, www.tradeempowered.com. Click on the Learn to Trade tab, and there's a free training video teaching you how to do this technique. We're looking for the break and close below structure, and we're looking for the retest and a chance to get short at the 618. Fibonacci retracement, swing high to swing low, bada boom, bada bing, 618 right up there. Now, when I talk to my traders in the live room and in the 12-week transformation training course about the 2618, we talk about different ways to enter, and that's a whole different story about aggressiveness and matching that style to your trading philosophy and your personal philosophy on life. Are you the type that just runs across your street, or are you the type that looks both ways and then tiptoes across? That's a story for another time. But within this 2618 opportunity, we also saw an advanced pattern. We saw a Gartley pattern, X to A to B, B to C, C to D. And because we had that Gartley pattern, we were able to use that as an excuse to enter aggressively into this trade, very similar to the euro dollar example I showed you. The rest is history. This thing rolled over for about 65 pips on target one. And between me and you, I'm still holding the second half of my position on this bad boy because I think we can go lower. But another good example of combining structure and advanced pattern together. So that's it for this week. Traders, that should be a lot of information, probably too much for you to handle at once, but luckily this is a recorded video, so you can go back on YouTube and watch this as many times as possible, along with the over 100 other weekend review videos that I have up. So until next time, plan your trade, trade your plan. Good luck in the rest of the markets. Good luck in the rest of the markets. All right, let me try that again. Plan your trade, trade your plan. Good luck in the markets for the rest of the week. Jason and I are having a pretty decent week of trading. Don't want to jinx it, but on Sunday I will write up a review of how the week went, and I'll share with you guys the stats and how we did as usual. You can find that over on our website, tradeempowered.com, under the blog section. I'll throw in an equity curve for you as well. So take care. Good luck. Good trading. See you next week.